there's a truth that not many people want to hear. A lot of people think they're investing, but in reality, they're just postponing their financial worries. They buy ETFs, stash them in an account, and lock it away with a promise: financial freedom 30 years from now. But you know what? Not everyone lives long enough to see that someday. Let's do some quick math. With a sizable investment, say $40,000 in SPY, do you know how much dividend income you'd receive each month? According to SPDR, with a dividend yield of around 1.3% annually, you'd get about $43 per month. $43! That's not even enough for a decent dinner out. Are you truly investing to live a more autonomous life? Or are you just putting your money into a high-risk savings account and hoping for the best? In today's video, we're not going to talk about how to wait. We're going to talk about how to build. I'm going to introduce you not just to 3 ETF tickers, but to a philosophy, a system I call the cash flow engine. A system designed to generate real passive income every month, consistently, and growing over time. And the best part? You can start building this engine with whatever capital you have. The core concept of the cash flow engine is simple. Instead of focusing solely on how much your assets grow on paper, we shift our focus to building a predictable stream of cash that flows into your account consistently. This stream isn't tied to whether the market is up or down today. It's independent, and it's the fuel that powers your financial freedom. Now, just like any real machine, a complete engine needs parts that work in sync. And our engine is built from 3 key components, 3 carefully selected ETFs, each designed to play a unique role in the system. The first component, and also the most important, is the heart of the engine, SCHD, the Schwab United States Dividend Equity ETF. Think of SCHD as your solid foundation. It's the core engine block. It's not flashy. It doesn't promise to make you rich overnight, but it's powerful and reliable. Its current dividend yield is around 3.7% annually. That's more than double what SPY offers. But here's the real magic of SCHD. It's not just about the current yield, it's about something even more powerful: dividend growth. According to Seeking Alpha, over the past 10 years, SCHD's dividend payouts have grown at an average rate of 10.61% per year, which is huge. What does this mean for you? It means your cash flow doesn't stand still. This year you might earn $100 from dividends. Next year, $110. The year after that, $121. And so on. Your machine is upgrading itself over time. You're building a kind of personal pension, one that increases every year and beats inflation. To pull this off, SCHD invests only in top-tier blue-chip United States companies. Giants with a proven 10-plus year history of paying and growing dividends. We're talking about names like PepsiCo, not just soda, but a global snack empire. Lockheed Martin, not just aircraft, but a pillar of the defense industry. Verizon, Chevron, these are businesses that have weathered multiple economic cycles and come out stronger each time. SCHD is stability, it's sustainable growth, it's the heartbeat of your cash flow engine. But even the best engine can't run well without a protection system. That's where the second component comes in. VYMI, Vanguard International High Dividend Yield ETF. If SCHD is the heart of the machine, based in the United States, then VYMI is the global shock absorber. It helps your engine run smoothly, even on the bumpiest roads. VYMI's role is simple, yet powerful: diversification. It invests in hundreds of high-dividend companies outside the United States, from top-tier banks in Canada to pharmaceutical giants in Switzerland to energy firms in the United Kingdom. Why is this so important? Because putting all your eggs in the United States economy basket leaves you vulnerable. The world is bigger than one country. And by adding VYMI, you're not just investing in America's future, you're betting on global growth. VYMI offers a dividend yield of around 3.5% annually with consistent quarterly payouts. It may not have the eye-popping dividend growth of SCHD, but it brings stability, geographic diversification, and resilience. That's the mark of a mature investor, someone who isn't just chasing wealth, but building a financial fortress that can weather any storm. Now, our machine has a powerful heart and a steady global suspension system. It's time to add the turbocharger. The third and most exciting component is QYLD, the Global X Nasdaq 100 Covered Call ETF. QYLD is different. It doesn't behave like a traditional ETF. Its entire strategy is designed to generate immediate cash flow using a technique called a covered call. Here's how it works. Imagine you own 100 shares of Apple. Instead of just waiting for the stock to go up, QYLD rents out that upside potential for a short time, say 1 month. In return, it collects a premium cash up front, and that cash is then distributed to investors as dividends. The result? An exceptionally high dividend yield, often in the double digits. Right now, QYLD is yielding around 11.5% per year, and it pays those dividends monthly. This is your turbocharger. It injects immediately a large amount of cash into your system. But every turbo has a trade-off. In QYLD's case, that trade-off is price appreciation. Because it's renting out future upside, when the market rallies hard, QYLD won't grow as fast as something like the Nasdaq 100. That's why QYLD isn't something you pour all your money into. It's an add-on, a tool to maximize monthly income. It's for investors who prioritize cash flow now over long-term capital growth someday. So, what happens when we put all three components together? Let's go back to our original example, $40,000. Instead of putting it all into SPY and getting just $43 per month, we divide it equally to build our cash flow engine. You invest $13,333 into SCHD with a 3.7% yield that gives you about $41 per month. You invest $13,333 into VYMI with a 3.5% yield that gives you around $39 a month. And you invest $13,333 into QYLD with an 11.5% yield that gives you approximately $128 per month. Total monthly cash flow, $208. Now pause for a second. From $43 to $208, that's an increase of nearly 400%. Sure, $208 a month won't change your life overnight, but it could cover your phone bill. It could pay for your Netflix, Spotify, or your gym membership. It could be a great family dinner, no hesitation needed. But the real value goes beyond the money. That number is proof. Proof that you've built a system that works for you. Every month, when that cash hits your account, it's not just money, it's a reminder. You're shifting from a person who waits to a person who builds. Financial freedom doesn't come from owning the biggest numbers on paper. It comes from owning a stable, predictable stream of cash flow, one that's big enough to support the lifestyle you truly want. The trio of SCHD, VYMI, and QYLD isn't a get-rich-quick formula. They are tools to help you start building your own cash flow engine, a machine that's sustainable, reliable, and grows stronger over time. Remember, we don't invest to impress others with big numbers. We invest to buy back our time. We invest to live a life that is intentional, calm, and under our control. So start researching, start building, even if it's just with a few dollars. Because the journey to financial freedom doesn't start with a large amount of money, it starts with a decision to think differently. If you found this video helpful, don't forget to hit like and subscribe so you won't miss what's coming next.